Hello everyone, good afternoon and welcome to today's Trading the US Open Live. So here at the Live Trade Room, we want to take our traders and we want you to benefit from really how we trade these financial markets. So that's looking at how we identify opportunities, where we look to get in, where we look to get out, looking at the psychology of these markets, not just from a personal perspective, but also from a market perspective as well. And you'll be able to see with full transparency how we get to generate consistent returns when we trade. So without further ado then, let us start with our risk warning, if that's okay. Obviously, there's inherent risks involved in trading these financial markets, so of course be aware of those risks at all times. Now, it's from the essence of managing that risk is where we generate our returns from. So it's not to be put aside and forgotten about. It's very much important to embrace the risk aspect of trading these financial markets. Now, we do so very carefully, which you will go on to see and to find out. Okay, so that is our risk warning. So we're going to get straight into these markets then. We'll bring up our trading platform and we'll do a quick review of the markets just to see where we're at. We'll do this over multi-time frame. So we'll look at daily candlesticks, and the reason for that is to give us a really strong idea in terms of which direction these markets are moving in, because what we do look to do here at the Live Trading Room is go with the markets as opposed to trying to counter trend and try and sort of sell the highs or potentially buy the outright lows. So for us, we want to look to stack the odds in our favor as best as we possibly can. So as you can see up on screen, we do have our dollar index, and what we can see today is we're currently experiencing a little bit of a bullish day today, as you can see. So over the last couple of weeks, as you can see from screen, we've had a bit of a pullback off the highs, and the reasons why that's quite important. If I just get up my my pen for you all, just bear with me just a couple of seconds. So it's great to have some new guests join us once more, so you're all very welcome to join us for this trading session. So I want to draw your attention to the fact that what we've experienced here from a technical perspective is a triple top. So this market is attempting to break these highs on multiple occasions, and it's actually failing each and every time. However, we do get a bit of a bottom breaking out in this market, and we've created another one just yesterday, looking at yesterday's lows. And today we've seen a bit of bullish price action coming in. So when we trade the markets, we want to know what the market conditions are like. And in the dollar index, we can see that the market conditions for the last month and a half, perhaps the best part of 2 months, is very much in a sideways moving pattern. So market conditions are moving sideways. Then we want to know what direction are we looking to buy or sell this market. And clearly we've identified these areas on many occasions, looking for great opportunities to continue to buy the dollar index recently, and that still remains the case. So we are still looking to capitalize on the dollar strength unless we have a reason no longer look for opportunities to buy. And that for us is a confirmed break below roughly the 93.21 level. So we get this little rollover of price action to the downside, and these prices really squeezing lower. So that's the dollar index. So for now, we are potentially looking for this price to increase, even if it's only fairly slowly. The likeliest outcome is that we're going to see these prices look to make a fourth attempt up to the $95 level. But we shall, of course, always wait and see. So we're in this sideways moving pattern as things currently stand. So I'll take off these scribbles currently up on screen. And of course, guys, if there's anything that I cover or that I say that you need a bit more explanation upon or anything like that, so if you need things to be explained again, don't hesitate to post it into your chat box, actually, and we'll be more than happy to answer any questions that you might have. So what we're going to do is we're going to have a look at the dollar index in a little bit more detail very shortly. You can see this price has pushed lower, come back to this previous level of support, and now it's looking like we're attempting for this market to push higher. What I'm going to do is add our one-click trading so we can get into this very easily if we decide to get into it. Now, a little bit more analysis is required, so don't necessarily jump in just yet. We'll come back to it very shortly. Looking at the euro dollar, and we will of course look at the global indices as well, and see what's been happening during the course of the US Open. But when we look at the euro dollar, we've got an inverted picture, of course, because the majority of the dollar index is weighted with the euro. So that's why we see a triple bottom this time and a bit of a pullback and this little extension lower. So I do want to have a look at the euro dollar to the downside and the dollar index to the upside. And that might give us a couple of really interesting opportunities for us. So, so moving on then to the pound dollar. We've got a little bit of pound strength, certainly over the course of the trading day, but it's now sort of converting to what's called a bullish spinning top. So a little bit of indecision in at these levels. It would have been interesting to see if we broke beneath yesterday's low, but of course we currently haven't seen that just yet. So there's still every opportunity that this market continue to roll over, especially if everything is if the dollar continues to strengthen. Is everything good? Everything good with the sound? And so do let us know, guys, if there is issues with sound or the picture itself. But I've got thumbs up, so all is good on our end. Okay, so so looking at the dollar yen, what we've seen in the last couple of days is this really strong explosive move. But I want to draw your attention to our weekly highs, which is the 111.38. It coincides with the high back towards the end of May, and we've literally bounced off that level. We're only a couple of pips below that level, the 34, so only 3.5, 4 pips beneath this low. So for all intents and purposes, that is exactly the same level. So we do like the dollar to continue to move to the upside and just break this little weekly high and continue higher. But as you can see, we're currently just below that level. So from a consistency perspective, when we trade, what we're looking to do is we want to either buy the breakouts of these significant levels. What we don't want to necessarily do is to buy the market prior to these levels of resistance, because what we're likely to see is a little bit of a rollover, even if it's very shallow, before we get the explosive move. So it's just about patience and timing, really, more than anything when it comes to the dollar yen, because we've seen the intraday move already over the course of yesterday and today. So just be a little bit patient there with the dollar yen. The dollar CAD is coming back to these levels, the 30.75. So this market is looking to bounce off that level, as you can see, which today we might actually looking to buy this market. So if the opportunity presents itself, we might look at this, except obviously, as you can see, when we do look at and I'll bring these levels, and I'll just change this level quickly just to indicate that it's more of an intraday level rather than a daily level. We can see that this market has been pretty choppy within the last, I suppose we're looking at 7 or 8 hours. So really not great price action in order to capitalize on the dollar CAD. Plus we do have major news out tomorrow, and I'll go through the news events very shortly so you can have a little bit of a heads up on that. So that's the dollar CAD. The New Zealand dollar, just to touch upon the trades that we look to trade. So we look to trade the majors, and that's largely the US majors against the other 6 major currencies out there. So we're talking about the euro, the pound, the yen, the Canadian dollar, the New Zealand dollar, and the Aussie dollar, and the Swiss dollar and the dollar Swiss as well. So in addition to the dollar pairs, we also have this is a high probability opportunity. We're currently in on this market to the downside, as you can see. There's our current entry price, but looking at daily time frames, so really we're looking for opportunities to sell, for this market to continue to sell to the downside. So this is a really good high probability opportunity to the downside, but we'll need to do a little bit more analysis before we get into it. Okay, so the euro yen, A little bit of selling off at this point. We would have expected this price to squeeze higher, but of course we've had a bit of a weak day in the euro, so that is playing out against the yen. But we do anticipate this market to just continue higher above the 130.38, so we'll have to wait and see tomorrow if that gives us that opportunity or not. The euro pound, as you can see, very choppy markets over the last 2 or 3 weeks. No major surprise really with the Brexit negotiations that are currently in play. Of course the cabinet, which has now changed face somewhat as well, just over the last few days. So the cabinet met last week at Chequers and all agreed to move forward on a plan with regards to trade. Effectively, it's the customs arrangements that they're going to present to Europe. It'll be interesting to see how Europe respond now with some more detail, really, in terms of the UK's position on Brexit. So the euro pound then, very choppy, quite explosive move yesterday. I'll zoom in a little bit more, but you can see the 10-month period of consolidation. We do anticipate this market to continue lower, but we are in this sort of range-bound, very choppy price action. Yesterday was looking very, very bullish up at these highs, and of course we've reversed literally all of that. All of yesterday's move, almost completely now, has been reversed, and is probably looking weaker at these levels, and potentially with a really strong move to further to the downside. So this is what we wanted to see, just looking at the US Open to see how the indices are affected by the US Open. As you can see, not an awful lot of movement if we go into the 15-minute time frame since the Open. A little bit of a movement higher, more of a rollover to the downside effectively. So not really an awful lot. It's been in this sideways moving pattern for quite some time, and very likely to actually get a little bit of selling coming in at 27.97, and this is one of the reasons why we look for opportunities for support and resistance, to really look to capitalize on a potentially resistance at this level. The reason why we know it's an important level is because it's prevented the markets on numerous occasions previously. So so tomorrow it might actually give us, if today's a little bit indecisive as it currently is, and tomorrow we break below today's low, below the 27.87, it could give us a good opportunity to sell this market with a clearly defined stop loss just above that level. The problem you have from a probability perspective is that you're actually selling quite a bullish market, certainly over the last 4 or 5 days, but it would be a relatively strong, reasonably high probability outcome that we'll get a little bit of selling before the next level comes into the upside. So definitely one to look for. The Dow Jones is very much playing catch up. The corresponding level with the S&P 500 is around the 25,421 level, and we're currently a little bit off that as things stand. So so we would expect this market to continue. What we'd like to see first is a little bit of a pullback, maybe towards the weekly highs, which is the 24,505 level, before we get this explosive move to the upside. And just finishing the US equities, we'll have a look at the NASDAQ. So this is a market which is very close to all-time highs. So the 73.57 is the all-time high in the NASDAQ market, as you can see, and we're getting a little bit of selling coming in off this high. So really it could give a prime opportunity over the next few days in the US equities to capitalize on a little bit of selling coming into those markets. So the FTSE market next, these are all-time highs up at these levels, so it's important to bear that in mind. There's every opportunity we could get a bit of an extension to the upside. Now, this has been very choppy price action. For those of our traders that have been with us over the last few weeks, you will know all about this choppy price action. It's market conditions that we can identify very, very easily, very, very carefully, and we were able to sort of stay out of that trade as a result. So So moving on then, it doesn't really give us a clear-cut opportunity as things stand. Now we do really like the gold market. The only problem we have with the gold market as things currently stand is a complete reversal off the lows. So we've currently seen a 50% retracement, which is actually, it's a bit uncomfortable really for the gold market. So again, from a trade selection perspective, we're going to monitor the gold market, but not necessarily actively look to trade it, certainly in this particular session, for those reasons. Now, we are getting a bit of strength coming into the crude oil, but this is the recent highs, really, the weekly highs of 75.25. We don't necessarily want to buy this market going into that level. We do have a year-long trend still intact, and we're at the top end of this trend, the top trend line. Now we'd like to be looking to buy around the bottom, around the $69 level, but we might not get that opportunity, bearing in mind the OPEC agreement and some of the sanctions imposed on Iran as well. So I'll just zoom in a little bit more for you so you can see this price action. So that's crude oil, and to just look at a couple of bonds, we do like the idea of these markets pushing lower, certainly over the longer term. The problem is with both of these markets, you can see that the market conditions are very much moving sideways. So we kind of want to see a much clearer picture before we look to get in to this market. So I'll take that off the screen. And it's actually the same situation as you can see for the Euro bond. So we're currently between the 162.92 and the 162.05 level. So so that's the Euro bond. So let me take you back, and we'll just go over the opportunities we're going to look at for the session. So we're going to keep an eye on a few of these. We would like to sell gold, but we're just going to exercise a little bit of caution. And the S&P as well, tomorrow might give us the opportunities to sell the S&P, unless we get the explosive move today above the 27.59. So I tell you what we'll do. We'll look at the daily time frame for this session. So we can look at this market. Oops, excuse me. We can look at this market. Let's place this market bottom right for today. So what we'll be able to do is identify the markets that we are certainly interested in. So we'll look at the S&P, because I'm just interested to see if this price does break above the 27.97 level. Now we have identified a few opportunities on the forex side. So we do want to look at these very, very carefully. We're going to place the New Zealand dollar just in the top right there, as you can see. We'll leave this in here. We also want to look at the dollar CAD. We can look at this bottom left. So we'll have a look at the dollar CAD. And the last two markets that we are going to look at is the euro dollar. We'll just put this top left for now. There you go. And this is the current price action. So actually the opportunity was very much to sell at the 17.16 level, just as things stand. So if we get a little pullback to that level, we might look to capitalize on it. I would imagine the same thing as occurred for the dollar index. So we're getting a bit of a bounce off this 94.01 level, which is obviously the ideal place to get into it. But yes, the move has already commenced, but this is always the case when you get set up and you look for opportunities to trade. You might find when you get to your trading desk that yes, the move has occurred. In our experience, you get plenty of other opportunities to look to get in and out of these markets. So dealing with sort of regret and the psychology of thinking that you've missed the move is not really that accurate, because you can get other opportunities to get into these markets and they come around periodically. So really, if you do miss an opportunity, just look for those opportunities and really look to try to be as patient as you possibly can when you trade. Okay, so that's the dollar index then. And what we'll do, we'll just monitor these four markets for now, because we've got a mirror image really with the euro dollar. So we can look at these markets, and we've got a pretty strong handle. We've got a low here in the euro dollar. We've also got the high sitting in there at the 17.21. And we're currently in between these two levels. So we want to wait for this opportunity to get into the downside. Now that was just over an hour ago at the 1 o'clock open. So we are seeing these prices just move over to the downside or just slowly drift lower. So it's just waiting for that opportunity. Now, a good opportunity I do want to look at, and what we'll do is we'll take a note of these intraday highs up here. So you can see this market has rejected these highs on a couple of occasions. We've been in this sort of long bit of sideways moving price action, and now we've had the structural break to the downside. So from a support and resistance perspective, and we're looking at these markets with a clean, fresh look, what we're looking to do is to sell this market at this level, and what we're looking is for the dollar to strengthen and get continuation over to the downside. So that's the trade. We've been in a period of consolidation for quite a while, as you can see, and then we get the breakout to the downside. So that's the first fantastic opportunity to the downside, and now we're looking to get the second opportunity very, very close to the 68.28 level. So So this is what we have. We have these prices just coming back to this level. So what we can do now, once we identify that an opportunity exists, we can certainly look at it in a much smaller time frame and see how it stacks up. So we're just slowly coming back to these levels. So what we're going to be looking for is a situation where we get what's called a structural failure, which means that this market needs to fail to make a new high. So we'll take note of this high. If it fails to make a new high and then starts to roll over again, this is your fantastic opportunity to get into what's called a structural failure. So looking at this level and looking to capitalize on that. So we do need to be a little bit patient with this market as things currently stand. Okay, so that's our trade idea for the New Zealand dollar, and if I just zoom in a little bit more for you, we want to see this market push higher, maybe up to the 68.25, and then if it rolls over back to the downside, then that's great. We'll look to get into what's called a structural failure, which is just a high probability move for us in this market. We can see the dollar CAD is looking to extend up to these levels, so we can see if we get a close above the 31.42. If so, we'll go ahead and buy the dollar CAD. So this is now the price action that we would like to see, but we want to see if the high holds or not. So let's mark these two levels with some intraday levels when we're trading. So what we don't want to see is a close above the 68.26. If we do get that close above that level, then we need to go back to looking for the structural failure to the downside. Okay, so keeping a close eye on the dollar CAD, the euro dollar, it may make a second attempt to push higher, and if that fails and we get a structural failure, then that's even a higher probability opportunity to take the euro dollar to the downside. And the S&P is just looking like it's going to squeeze to the 27.97 level. So just looking at a few questions coming in. Mike No problem at all. You've joined us a little bit late, so no problem. Have you missed any trades? The answer's no. Well, I suppose the answers are that we've missed a couple of trades about an hour and a half ago. So it would have been the high probability setup, for example, to sell the euro pound, or the euro dollar, should I say, at this level, that would have been the better opportunity. But look, we have extended lower and we've pulled back just a little bit as well. And I'm just conscious of the dollar, the New Zealand dollar. We might get close. So if we get a close above this level, then we are going to extend just a bit further to the upside. So I'll come back to the New Zealand dollar very shortly. So so let me see. So you haven't really missed an actual trade yet. We're just exercising a little bit of caution in these markets. We've had a few moves in a few markets already today. So Mike as well. Sorry, Corey. What trading platform are you using? It's a MetaTrader 4 trading platform. So you can. It's probably the most commonly used platform out there. So it's very quick and easy and very intuitive to use as well. So you can have a look into that. Or do contact us if you want some more information about MetaTrader 4 platforms. We even have videos available to our traders for those of you that that need some support with perhaps navigating or understanding MetaTrader 4. So the New Zealand dollar, we said we'd have to reassess, and that's exactly what's happening. So let me zoom in just a little bit. Whoops. So we have this market just coming back to this level. So if we get a reversal anywhere around this area is absolutely fine for us. I'm going to delete this level now. So we've actually got this range to work with. And if we go back to the 15-minute time frame, that's in keeping with very much these lows. So actually selling around a slightly higher level of the 68.22 or 28 level, should I say, is not necessarily a problem. Okay. So we continue to look at this market. So we've got the euro dollar just strengthening a little bit. The dollar CAD is very much indecisive. The S&P 500 is between this very, very tight range between the 27.97 and the 27.87. And we might look to sell this market in and around that level if we get the opportunity to do it. So we just got to be patient and just wait for those opportunities to arrive. So if you do have any questions, do feel free to post them into the chat box, or if there's any other markets that you'd like us to have a look at, certainly while we're waiting for these opportunities to develop. We can see really when we look at the New Zealand dollar that we're getting a really strong pullback, and this is kind of a double bottom. So we do want this market to be held up in and around this level. Let's have a look at it on a 1-minute time frame. So we would like to see a bit of a structural failure up at these levels. If that's the case, we would definitely look to get into this to the downside from this area. So there's definitely potentially a good opportunity stacking up for us here in the New Zealand dollar, although it looks at this recent price action that we are trading this market to the upside. The problem is we've just run into resistance, so it's actually normally quite a high probability opportunity to sell from this level. So we'll see if we get that opportunity or not. Just to let you know, guys, there is a link below. So for those of you that are interested in the approach that we adopt, there's not just myself, but we've got other traders here, and we trade up to 5 trade rooms per day. So it's a really hands-on, practical environment for you to learn how to trade, hopefully pick up really strong, positive habits, professional habits that profitable, consistent, professional traders look to adopt. And it's done so in a very practical environment. So so that's very much what we offer here at the Live Trade Room. So do go to a website, just Google effectively TheLiveTradeRoom.com, and there is currently a 14-day free trial. No strings attached, absolutely not. There is, if you want to continue with us, you're very, very welcome to do so, but it does give you an opportunity to sample before obviously trying. So and one of the things we pride ourselves on as well is the affordability of all the products and services that we offer. So they've been put together, been built by professional traders for traders like yourself, the ones that are really looking to improve their understanding, improve their consistency and disciplined approach when they trade, and look to grow their capital in more of a consistent manner than perhaps many other educators out there. So if that's what you're looking for, then by all means do come and join us. Go to a website, just Google TheLiveTradeRoom.com, and you'll be able to access the free trial there. And we've got a variety of different trade rooms as well. It's not just kind of scalping type trades. We do look for some more long-term trades, and we have every evening we have our capital growth webinar as well. So that's a live trade room for about 30 minutes each and every evening. And what you can do is you can join us for that, and we look to capitalize on some, big dollar moves, or some of the big moves we've seen in the global indices, or perhaps in the commodity markets as well. So we definitely look for different opportunities in different asset classes, and that's again a skill that really needs to be defined, because you don't necessarily want to always focus on foreign exchange. Do understand perhaps how multi-assets work, and look to capitalize where the opportunities present themselves. You don't necessarily want to be trading consolidated forex markets, for a prolonged period of time, which can happen on and off. So diversifying, looking and understanding how to trade things like the gold market and the government bonds, and also markets like the global indices as well, of course. So there's a multitude of different markets there that you can really look to focus on. Okay. So just looking at these markets, like we do have the beginnings of a bit of a structural failure. I mean, there's not much in it from a pit perspective, but if we get prices procrastinating or consolidating around 68.28, could give us a good platform to capitalize on a bit of a sell trade in the New Zealand dollar. Okay. Scott, you're just saying to us, can you have a look at Bitcoin? Absolutely, Scott. I'll come back to the New Zealand dollar very, very shortly. Good to have you join us again, Scott. Okay, so let's have a look at Bitcoin. So, so what we're clearly seeing is this market just roll over to the downside again. So we've created the low recently. We've had a little pullback to these levels, and we've now got a double top, and this market just extending lower. So actually a break below what would have been certainly yesterday's low would have given you a good opportunity. This would have been Sunday's candlestick. So either or, but although on Monday for the majority of the day we actually got a bit of bullish price action coming into Bitcoin, so bit precarious, but as you can see, we're getting this extension lower. So from a probability perspective, we'd be looking for opportunities to sell it, although you do need to be careful with trading cryptocurrencies. Of course, everyone benefited from the major move over the course of last year, where prices effectively went from, let's take you back to April, so around the $1,000 mark, up to just below the 20,000 mark over the course of the year. So you can see January down here, we're about $900,000 mark, and over the course of 12 months, we've seen almost a 2,000% increase on your investment if you got into Bitcoin. So what I suppose autumn and winter of last year started to see large volumes of traders pile into this market, creating a real difficult situation, more so for the brokerages as well. And then what happened towards the end of last year was that the big financial institutions could eventually trade cryptocurrencies, and the Bitcoin market, there was future contracts available on the price of Bitcoin, and as a result we extended higher ever so briefly. Sorry, let me take you back to this level. We extended higher, anticipating this market to squeeze above the 20,000 level. We didn't quite get to that level, but virtually we did before the clearly a lot of selling came into this market, and now we're currently down at a price which is around the 6,000 level, which is a 70 plus devaluation over the course of the day, so over the course of the year so far, and we're only in July. So anyone that has held on to these to this trade, and there is a lot of people still holding on to Bitcoin, they're anticipating it's kind of a long-term opportunity, but from the highs they would have experienced a pretty spectacular devaluation of their investment. However, they're still probably in significant profit. What remains to be seen is for how long are we going to get this price extending lower down to 4, 3, 2, 1. We really don't know. So so just a difficult market to trade with leverage, Scott, actually. So so hopefully that's helped. If you do have any sort of additional questions, do let us know. So let's go back and have a look at these markets. So we are getting this consolidation around the 68.28 that we're looking for. So this might give us a really good opportunity. And the S&P. So threatening to push higher the S&P. So right, what we want to see then now is this market range. There's only a 3-pip range here, but if we start to see this price just roll over to the downside, we might look to get into the downside with a really short stop loss on this market as well. My pleasure, Scott. I hope you found it useful. Okay, so so the only trade we're going to look to take today, and I'm just conscious that there's a little bit of dollar weakness just creeping into the market, which is why we're seeing this price accelerate, is a very small New Zealand dollar trade, and we're going to look to get into it below the 68.27. So very likely to get this market extending lower below those levels. So 68.27. So maybe look to get in around this level, 68.25. Place a stop loss above the 68.33 potentially. So you want it to just be above the high. So there we go. We're just getting that little bit of a move now. So I might take this trade then before you. And please, obviously, of course, just amend the size of the trade suitable to the amount of capital that you have available. And if you're in doubt, do trade 0.01 until you know that's the smallest size you can trade. So you're talking about 10 cent a pip movement, and you know, if you made a mistake or an error, then it's not devastating. So what you're seeing with this is this market close below that level. So I just want to see these lows just be broken, and we will look to get into this market, and I'll place this trade before we finish. All right. Okay, so we've placed that trade. You can see the sell signal. It's just in there at the 68.26 level, and what we're going to do with the stop loss is place this stop loss just 2 or 3 pips below. So there's our stop loss, there's our entry, there's our stop loss. And generally, in terms of profit, what we want to do is ordinarily look to aim for a 2 times our risk. So if we expose 7 pips on our exposure, we'd like to, from a consistency perspective, to just get very good at booking in 2 times risk. So we can look at a 14 pip improvement, so down to the, so if we get the market moving down to this level, we're quite happy to book in that much profit. And that's generally kind of our approach to trading these markets. We're looking to sell the New Zealand dollar, and it's really identifying these opportunities and being consistent, and you know, we do look across a wide range of different markets. So it's really being able to identify these levels, which is what's really fundamentally quite important. So so we do expect this market to continue lower. We've seen this price consolidate at these highs. We've kind of had this little mini breakout. Now there's going to come a point where we're going to attack these highs again, but you do want this level of resistance to stand in the way, which is really why we've traded this level. So that's the New Zealand dollar, and we do expect this market to continue lower for the shorter term. Okay, the other markets are not really giving us the opportunities that we'd look for. So so what we'll do is we'll pack it up there. We're already in the New Zealand dollar, so we do have those levels in play as well. So any questions, as always, don't hesitate to post them into your chat box. So if you do wish to follow us, please do on Facebook, Twitter and LinkedIn. We're posting lots of content on those sites. So do feel free to look for us and do add us. And of course, what we'd like you to do is obviously subscribe. Click the subscribe button and share as you know. Share this video and the content within it, and of course thank you as always for joining us. So do take care. We do look forward to seeing you next time. We'll keep a very close eye on the New Zealand dollar and see if we can book in some more profit for the trading day. So all that's left for me to do is to thank you very much for joining us. Do take care, and we shall speak to you very, very soon. For everyone here, bye for now. Is there? Because I noticed when I was looking at it. Oh yeah, no, you're seeing a lag, aren't you?